we're taking a look at the currency market now with Nomvuyo Guma, Macroeconomic Strategist at Standard Bank. Thanks so much, Nomvuyo, for joining us this morning. Well, a lot of movement coming through yesterday. And of course, as we awaited those announcements from the ECB and BoE, they eventually came through pretty much in line with expectations. We saw a hold being maintained on rates on both ends there, and then further stimulus being pumped into the market. Your reaction or market's reaction to that news flow that filtered through?
Morning, Alishia. Well, as far as the rates decisions goes, that was pretty much in line with our view. We had expected that after the Fed launched Operation Twist and in light of the deteriorating economic environment globally, we had anticipated additional quantitative easing from a number of central banks, most notably the ECB and BoE. So we weren't altogether surprised by yesterday's actions. We had anticipated or had hoped that the ECB might actually cut rates in addition, but they didn't, and instead opted to launch quite an aggressive liquidity package to shore up conditions in Europe. So on the whole, pretty much in line with our expectations, and markets also seem to react very favorably to the news. The Rand also rode that wave of optimism and managed to sustain a downward breach of the 8 Rand level. So really filtering through into currency markets there, and in all, turned out to be a pretty positive day for the Rand.
While that came in line with expectations, the decision out of the Bank of Japan this morning, not so much so. I mean, we had the Bank of Japan leaving rates on hold and no easing coming through either.
Yes, Alishia, that was a little bit unexpected. We had expected them to follow suit with the other leading central banks and announce some measures of additional liquidity. But we have to remember that they did announce in the interim a liquidity additional bond buying a few weeks back, and that was related to their efforts to intervene in the currency markets and stem the yen's appreciation. So perhaps it's just a timing issue. We still look for some additional easing from this bank in future.
What about the kind of activity that reserves data locally in South Africa, which has just been released, indicates about the kind of activity we're seeing by our Reserve Bank, because we've seen net and gross reserves declining for the September period and coming in below expectations?
Yes, the decline in net and gross reserves was an unexpected result, but largely related to revaluation effects. We had the euro and pound both weaken against the dollar in the month, and that affected the dollar holdings, dollar forex holdings. And we also had a depreciation in the gold price in September after it ran up quite high in August. So all of that filtered into the decline that we saw in net and gross reserves. But when it actually comes to the SARB's activities, it looks like they stepped up reserve accumulation quite aggressively in the month. They normally buy, we estimate that they buy forex in the region of 300 million per month, and looks like it went as high as 500 million in September. So really moving with market momentum in that instance and going with the trend as the Rand was starting to weaken. Seems that they also stepped up the pace of accumulation in that month.
Well, we're doing a complete 360 today, Nomvuyo. Let's end off in the United States. Of course, all eyes on a non-farm payrolls data, which is expected to be released today. Broad expectations on that front, because it seems that there's some optimism in the air.
Oh, certainly. The ADP report that came out earlier this week pointed to some quite healthy job growth in the private sector. Then we also had initial jobless claims coming in much lower than was expected yesterday. So all indications are that we should see some growth in payrolls, and that's after they stagnated in August. So that certainly seems to be what the market's anticipating, and that is our view as well. So if all things being equal, the US unemployment rate should have remained steady at 9.1%. Of course, should this data disappoint, we could see another reaction from the currency markets, with the Rand expected to weaken perhaps above the 8 Rand level, perhaps as far as 8.10 this morning.
Nomvuyo, thanks so much for your time this morning. Nomvuyo Guma is Macroeconomic Strategist over at Standard Bank.